My name is Sid Haas. I'm the Vice President of Business Development here at LKCS, and I want to welcome you to today's webinar. Obviously, over the last few weeks, a lot has changed for all of us. And actually, 10 weeks ago was when the first coronavirus case was diagnosed in the U.S. And we've all seen how not just our world, but the entire world has changed. It's probably changed forever. Things will go back to normal at some point, but I think we've seen that digital solutions are now even more important than they were before. And obviously, things change with mortgage products and solutions in just those last few weeks. It's only been about 3 weeks since the president declared a national emergency. But I want to introduce you to both LKCS and Lenderful Solutions. So many of you on the call today know LKCS. We're a marketing services provider to banks and credit unions nationwide. We provide services across all delivery channels, print and electronic, as you know. But Lenderful Solutions is a name that you may not be familiar with. LKCS partnered with Lenderful Solutions, and we invited them to present our webinar today. They have a tremendous digital lending platform. Really a next generation platform that really engages borrowers, through the entire borrowing cycle. So I want to introduce Michael Goyne from Lenderful Solution. He's going to take over the presentation and introduce their solution to this digital mortgage and digital lending challenge. Michael, the floor is yours.
Thanks, Sid, and good afternoon, everybody. As Sid mentioned, my name is Michael Goyne. I'm the Director of Business Development at Lenderful Solutions. We are a software as a service company headquartered out of Pontiac, Michigan. However, I call Petoskey, Michigan home, kind of way up towards the bridge. I understand that many of you that were enjoying all of that wonderful warm weather yesterday down at least the LKCS area of 80 degrees or so, we did not get much above 48. So I'm looking forward to some of that warmer air pushing up here soon. I hope today finds all of you safe and healthy, and I hope everybody has a little something to be grateful for. I'm grateful for the fact that I got my hair cut right before the salons and barbers shut down, so I'm still hanging in there. But I know many of us are looking forward to the next time we can get out and get ourselves trimmed up a bit. But for the next little less than an hour here, we're going to just run through a real quick presentation that provides you with some information about kind of the industry itself and what it's doing to transition to, we'll call it the digital age, and the digital solutions that are available out there to support both the mortgage and home equity lending business. We'll talk a little bit about some of the challenges and some of the strategies, and hopefully provide you with what we think is a good direction for those of you that are looking for ways to move forward, to create change, and really, either maybe play catch up a little bit with your competitors, or to take a big step ahead and differentiate yourself in your particular marketplace. So let's just start with a little bit of historical perspective here. Obviously, in the last 5 years, there's been a lot of change in the mortgage industry in particular. And Quicken Loans really was the impetus for that change. When they launched Rocket Mortgage in November of 2015, it was obviously received extremely well. It was a big splash. But I think, as everybody knows by now, it's not really push button get mortgage. It's what it really turned out to be was a fantastic marketing tool. And I think even more importantly, a fantastic way to capture borrowers' interest and get them engaged very, very quickly, and pull them into the Quicken Loans environment. What's really interesting is that since Rocket Mortgage was launched, and it continues to be improved and it evolves just like everything else, the time that it takes from application to close really hasn't changed all that much. They're still looking about the same amount of time as they did 4 or 5 years ago. There's been some modest improvements here and there, but for the most part, it still takes about the same amount of time from application to close when it did in 2015. but there's no denying that they grabbed a lot of market share, regardless of the time that it took to pull that application all the way through to closing. And that kind of reminds us that, as LKCS likes to say in their advertisements, mortgages are not always about speed, it's about experience. And Quicken created a fantastic experience, and you'll hear me echo that frequently during the course of this presentation and demonstration. A couple other historical facts. In 2011, 8 of the top 10 lenders were banks. Just 8 short years later, 4 of the top 10 lenders were banks. Obviously, non-bank lenders like Quicken, Loan Depot, and others grabbed the market share. Mortgage brokers as well came back into prominence and grabbed some share as well. But what was the driving force behind that? Well, obviously a little bit of change coming out of the 2008-2009 financial crisis, but really the real driver behind that was the fact that non-bank lenders were able to create and adapt and adopt technology that, again, improved that level of experience for potential customers and drove them there as opposed to traditional outlets for loans. Another interesting stat is bank customer satisfaction levels exceeded those of credit unions for the first time in 2018, and has been for the last couple of years. And I think that raises a lot of people's eyebrows and go, well, wait a minute, member satisfaction at credit unions has always been significantly higher than that of banks because of the personalized service levels and such that they have the reputation of providing and such. But why did that change? And again, it goes back to technology. The banking industry has been a bit faster in terms of adopting new technologies, which allow customers to do business on their time, on their devices, and at their convenience. So we again see evidence that technology has really created some significant change. And of course, there's been this explosion of fintech companies out there. Of course, we're one of them that provide solutions across the entire loan life cycle. But all along, we're in this process, and we're still fairly early in the process of transitioning from a people and paper intensive process to a digital one. But as you'll hear me often say, people still have an extremely important part to play in this. Lenderful Solutions, we focus on community banks and credit unions. That's who we're here to serve. Our products and solutions are intended to provide a way for you to engage your clients and your members at a price that community banks and credit unions can provide. And we know the extremely important part of that are your people and that personalized service that you do provide. We don't believe that going digital means replacing people. It means enhancing and enabling them to do their job better and obviously create a happier client or member. So what is a digital mortgage? Well, I think there's a lot of definitions behind this. But essentially, there are options to apply technology across the entire loan origination lifecycle and beyond into servicing as well. And fintech companies have created solutions for pretty much every component that you see here, and then some. But I think what you'll find is some companies have tackled certain pieces of it, maybe a few pieces of it. Some even might say that they have the majority of it, but there's really nobody out there that has been able to solve for that entire origination lifecycle. If you go into the various pieces and components and such, it could be extremely overwhelming. Talk about, all right, just point of sale. How do you grab the attention of that customer? Maybe the relationship management component or document uploading and so on and so forth. All the verification services and disclosures. I mean, there's so many ways you can apply technology or upgrade or improve your technology to solve for any one of these pieces of the process. It's definitely very, very overwhelming. And I'm sure those of you that have looked into the various solutions out there, you're probably talking anywhere from 10 to 20 potential vendors in each one of these particular categories. So it can get extremely confusing and extremely difficult to analyze. But no one really has solved for that entire process. Eventually it might happen, but most likely that's going to take years and potentially decades. So what do you do today, especially those of you in community banks and local credit unions and such? How do you tackle such a large, complex process and make forward movement so that again you can get new customers, new members and maintain the one. Start. Well, I've always said that there's no better time than the present. I understand we've got a lot of different distractions going on right now, but there's really no reason why you can't make forward progress today. And we'll talk a little bit about how to do that. It's not an evolution, it's not a revolution, it's an evolution. We're fond of saying that because I think a lot of people sort of look at the whole thing and go, oh my gosh, we've got to make this fantastic switch and change, and it's going to upset every apple cart we have. It's going to disrupt our business, blah, blah, blah. Well, no, it doesn't need to be that. There's some very specific steps you can take to move forward and evolve and change in a very responsible, practical manner, rather than creating a real significant revolution that would have negative impacts on your business. We know changes have costs, whether it's just financial, those with or internal resources, managing projects, or it's an expensive process. Hitting timelines, making sure that you're completing those projects in a timely fashion. And then obviously there's always these other competing priorities as well. You have to you have to take all this into account while you're figuring what direction you take. But you do have to take those considerations into account. But frankly, the opportunity really is now. This whole process doesn't need to overwhelm you. You can't really afford to be overwhelmed right now with what's going on. But there are steps that you can take that will help sort of push your organization into the next generation and the next generation capabilities of providing lending services for your clients. I thought it was kind of fitting to quote someone who is known for writing scary things, and Stephen King here has this quote of where amateurs sit and wait for inspiration, the rest of us just get up and go to work. And I think it's important that if we don't take action, the outcome is definitely scary for our institutions. So if you're not motivated to do something, I suggest that you find that motivation. Don't necessarily need the inspiration, other than that if you don't do something, the outcome is certainly going to be a negative one. So what are other banks and credit unions doing today that sort of jumped into this and foray and try to take some sort of action or direction when it comes to digitizing or creating a better online experience for their customers? Well, there's kind of four different processes, or four different, different types of strategies that we've discovered as we've talked to various clients and potential clients. And the first one is what we kind of call analysis paralysis. And that is just those companies that say, hey, look, we know we have to do something, but we're going to form a committee, or we're going to put somebody in charge of digital transformation, and we're going to analyze this thing to death. We're going to look at all the vendors out there. We're going to look at all the different ways we can invest our resources, and they get caught up in that. I know banks that are probably 3 to 4 years into that process and have not really done anything, have not taken step one to improve their process and to create any real change. So that's very common, just the paralysis of that analysis. I think others also are very, very fulfillment focused, meaning that they're looking at those components that can help save some money, reduce some expense, maybe create a little bit of efficiency. And those components that are commonly looked at are document uploading, or just acquiring various documents that are needed for the process, creating borrower communication portals, creating disclosures, and then e-signing, document execution, and things along those lines. So it's kind of a piecemeal approach, and there's a lot of challenges with that, because one system may not talk to another system, or it may require you to change vendors in terms of who you're utilizing today, and then that can be a real challenge for a local bank and credit union who has very strong relationships with local vendors, and it makes it difficult to sort of piece everything together long term when you do that, when you take that kind of approach. It's not that you can't find components where you really can attack and create some effective change, but it's not always the most effective strategy. Others have just sort of looked at it and say, hey, look, I've got this loan origination system. They offer an online application that I can sort of tack on, and then I'm good. I've given my borrowers, my members, an opportunity to apply online, and I've sort of solved it for the short term. Well, Several problems with that. One is most loan origination systems don't really have what we consider a very modern digital experience and an effective overall experience for what members and borrowers want today. And a lot of times those applications, they need to be configured. You need to have internal resources in order to configure them for your particular usage and your particular brand and so on and so forth. So it's not very effective. And a lot of times too, they'll ask the consumer to create an account and a password or provide their social security number, things that tend to scare potential customers away rather than draw them through your sales funnel and ultimately attract them to your institution. Lastly is one that we feel makes a lot of sense, especially for most banks and credit unions that really have not done anything significant to date, and that is to really focus on the customer acquisition and that retention experience. And there's 4 components of that. It's providing the opportunity for that customer to educate themselves, learn about the different loan programs, whether it's mortgage or home equity, shop for the right one that's for them, and be able to shop without having to make a call or talk to a loan officer. At least do enough of that shopping to get comfortable with what they think might be right for them, and then ultimately select that loan program and then apply. And so that's a very different approach than just saying, hey, go out here when you're ready to apply, and here's our form, fill it out, blah, blah, blah. Well, by providing them with some value up front, allowing them to educate themselves and shop and select the right program for them, and then apply in a manner that is extremely efficient and simple and fast, that we feel is a much better approach than just kind of having an LOS and tacking on an application to it. So kind of how do you decide which tactic do you take? Well, obviously you've got to prioritize things. You need to look at revenue versus costs, obviously return on your investment, all of that kind of fun stuff, and figure out where you're going to get the biggest bang for your buck. What do you want to impact? Do you want to impact primarily that client experience, which we think should be the first and foremost thing you should consider, or your operations, or potentially both? Also need to be sensitive to the resources you have available to you. How much change can you create based on the financial and personnel resources you have and the capabilities of the personnel that you have? There's a reason why 70% of digital implementations fail. And that is because some of these questions have not been considered before you jump into something. And oftentimes it's because leadership has not kind of embraced what needs to occur in the right order and within the right time. So all of those things are things you need to figure, look at your own institution, make your own determinations of what makes the most sense. But we're going to suggest that your suggested roadmap really starts at the beginning, and you would be best served by starting at the very beginning of the process. Put your members, your customers first, because without any volume, if you're not capturing the business, the efficiency that you can potentially do by digitizing other pieces of the process is really irrelevant. You're not going to see that efficiency or expense saves if you don't bring that business in the door first and foremost. So you must offer that competitive experience. And I go back to that's essentially why Quicken and created so much business or developed so much market share with Rocket Loans. So with Rocket Mortgage, excuse me. Again, you want to enable your borrowers with technology without sacrificing the personal touch that community banks and credit unions are well known for. It's a way to support those operations and support those efforts, but again, keeping your people close to your customer base and member base. And I think one thing that we don't think a lot about, and that is being able to increase the capacity of the loan originator. Give them a hand, help them. I think you'll find when we get into the demonstration that there's a big difference in terms of timing and how much a loan originator can handle when they're taking an application on the phone or maybe at a desk across from their customer, although that's not happening today. But those applications can take 30, 40, 45 minutes or so to complete, where if you have an effective online experience that allows that customer, again, to learn, shop, select, and ultimately apply, and they can do that in maybe 8 to 10 minutes, you've just made that loan originator that much more effective, that much more efficient. So think about digitizing that whole process, so that education, that shopping, that selection, and that application. All right, pause for a real quick reality sanity check, kind of where we are today with everything that's going on in the environment. It is temporary. I think Sid mentioned that. We are going to come out of that. It's extreme, there's no doubt about it, but it is temporary. We know there's a lot of refis that we need to deal with because of where rates are today, but purchases will eventually rebound. They will grow back up to kind of what we expected them to be for 2020, hopefully. But we are going to need to service both parts of the market. And going digital is really no longer an option. As Sid mentioned early on in the introduction, this has shown that we really need to have much better online solutions, web-enabled solutions to service our clients and members. And if this hasn't convinced you in terms of what we're experiencing today, I'm not so sure what would. But I think a lot of people are thinking to themselves too, yeah, but how can I do this when I've got all this stuff going on right now? I'm taking all these small business loan applications, or my customers are freaking out about being able to pay their bills, and I'm just talking to them and taking a more consultative approach and things along those. How can I find some time to make forward progress? Well, I'm going to challenge you and say you can, but you need to make sure that you partner with those that are going to do the majority of the heavy lifting for you. And LKCS and Lenderful, I believe, are those partners where we're going to do the majority of the work and ultimately provide you with a solution that will help you with your forward progress. And again, we're going to focus primarily on, as I said, that front-end customer experience, that pulling them through the sales funnel, getting them through to application. But you might not think of it as a way to control expense, but it really does overlap. You can increase your revenue by improving the experience and pulling more customers through your sales funnel, but you're also decreasing the amount of time it takes to complete applications. And there's another component out there that I think some of you are experiencing, and that is the deluge maybe of calls that you're getting asking about, hey, what are your rates today? What's a 30-year fix today? What's a 1-year ARM today? If you have a way to efficiently handle that online in a digital experience, you're going to take people away from answering those phone calls, putting them on other projects or other parts of the process, and help keeping your operation as efficient as possible. So I think you can look at this sort of front end point of sale pull through to application component as not just a tactic to increase revenues, but also one to control expenses as well. So Sid, I'm going to jump into the demo if that's all right. I don't know if we have any questions or if you want to.
Absolutely. I don't see any questions yet, so please feel free to ask. But no, go ahead and jump into the demo. I'm sure some questions will come in as you show the software.
All right, Sid, just to confirm, you can see the Lenderful branded site?
Yep, looks good.
Okay, thank you. So first thing I should state is all of our software is white labeled. So that means it can be private labeled to your brand, configured for your purposes, your colors, your logos, language, all of that kind of fun stuff. So everything can be configured to fit your institution. The particular one that I'm going to show you today is, of course, just a Lenderful branded one, but I'll show you some other examples of actual customers so you can get an idea of maybe some of the different looks and feels. But I think the one thing that you need to keep in mind is a good customer experience is one that's simple, clear, clean, elegant, one that provides value to that customer or member very quickly, allows them to find what they're looking for very easily. I think a lot of websites and experiences out there can get very, very busy with a lot of language, a lot of information that really is superfluous to what the customer or member is actually trying to get to. So we try to make the information as accessible as quickly as possible. In this particular layout, you can see up here at the top, we have some various connections or links where they can find information about various parts of the process. So if they want to learn and educate themselves about pre-qualification, scores, loan types, property valuation, so on and so forth, they can do all that. And all of this information does come with a standard package, but again, can be configured based on what type of information you would like to include for your particular company. And also I should mention too that all of this information is laid out in a way where it's optimized for the hardware that that particular borrower might be utilizing. So in other words, if they're looking at it on a desktop or mobile phone or a tablet, everything is formatted to fit that particular screen and look its best regardless of how they are accessing the software. Has a full suite of calculators, mortgage calculators, amortization, affordability, all sorts of different calculators available. And then of course, loan options as well that specifically talks about the different types of loan options available. And again, it's all configurable based on what you offer, FHA, fixed, adjustable, maybe VA, all of that is configurable for your organizations. So generally when a customer comes onto your site and is looking for information about a mortgage, often they want to get rates, and that's very frequently what a customer is going to look for first and foremost, maybe after they've done a little education. But this goes back to how you can be more efficient in answering those questions for your potential customers. So in this case, we just have this big button that says get rates, and they can go to either purchase and refinance. But rather than just popping up a screen that says, hey, our 30-year fixed rate today is X, we walk them through a quick set of questions that then will provide an answer that's specifically tailored to their situation. So in this case, what is the purpose of the refinance? We'll go with lower my monthly payment, property home or property type. What type of property are you refinancing? And everything that we do in terms of asking questions and such, it's always in this sort of Quizlet type format. We usually only ask 1 or 2, maybe 3 questions per page, again, to keep things simple, legible. We use these little question marks here to have additional information rather than cluttering up the screen and providing all that right there. There's that additional information there should they need some additional education. What is your estimated credit score? Pretty much everybody kind of knows where their credit score is, but again, all of this is configurable based on the programs that you offer. Will you have an escrow for taxes and insurance? And what is the estimated home value? I'll just throw in a sample here real quickly. $400,000 home, $250,000 loan amount, and the zip code of the property. And then you notice it now asks for contact information. Again, one of the things that really scares people away is when you ask for contact information without really providing them anything of value or leading them down a path where they actually want to provide their contact information. So this is all done for a very strategic purpose. So you provide the contact information, and then what the system is doing is it's going out to a third-party provider where we grab the actual real-time rates for your investors for the programs that you say you provide, and we figure out which ones are a match for that particular situation based on the information that I answered in those questions. So it compares all of them, provides payment, rates, APRs, so on and so forth. It allows the borrower to email the rates to themselves if they want to have that for future reference. And at the same time, that information is always also going to you and your loan officer. So that loan officer knows exactly what has been shared with the customer. It allows that borrower to adjust the terms should they so desire. It's like, oh, my loan amount was a little higher than I thought, so I'll recalc. So then it provides, again, the options I have, all the while trying to sort of pull that customer through to actually making the decision to apply. So I like this particular option here. I'm going to apply. And then it jumps into an application. But if you notice, it's not a form. It's that Quizlet style. It's sort of that TurboTax type style of asking questions. And it only asks the questions that are specific to the specific customer. So in other words, the questions can be dynamic, and I'll show you some examples of that as I go through it. But what we're going to do here now is we're going to actually complete what ultimately turns out a full 1003 application in about 8 minutes. Is about how long it takes to actually do this. And of course, that depends on kind of how complicated, if you will, the application is. But you see here that it references the rate and term, the program, I should say, that I selected from the previous screen. And it does not ask me to re-input answers to questions it's already asked. So in this case, I had already asked what the purpose of the refinance was, and my information was already input. Same thing with the personal information. Ask for my birth date. Oops. And then walks through the application. And then also it does use Google Prefill. So if the borrower or member is using a device that has recorded their own information, it will pre-populate it, again, shortening the time for them to complete the application. I've already input this information about the property that I'm refinancing, so it's not asking them or asking for it to be re-input. It also allows me to save it for later if I run out of time or I get interrupted, and I can come back in and complete it. Ask if I own additional properties, and this is an example of what I was suggesting was dynamic. So if I say yes, it's then going to pop up the information about my additional properties. If no, it's not going to have that. So again, simple. It's not cluttering the screen with any information, additional information that's not pertinent to this particular borrower. Estimated credit score, marital status, dependents, etc. Well, I have a co-borrower. Again, another example of a dynamic input. Escrow account, yes or no? And again, a little bit of additional information. Should I need to know what an escrow account is? What my current taxes are? Association fees? Income source. And the system does allow you to put income in from pretty much any type of source that they might have. And allows you also to account for overtime, commissions, bonus, so on and so forth. And one interesting thing too is if I put in less than 2 years, notice how it popped up automatically previous employment information. Now, if I have been employed at my existing employer for at least 2 years, it does not pop that up. So again, another dynamic example. And I can add additional income sources should I desire, and there's all sorts of different income sources that you can input. Available assets, so it allows me to utilize any of these others. Oops. And I can add additional accounts as needed. And so on and so forth if I wanted to add more. And then it goes through all the borrower disclosure questions. And again, these may be dynamic based on the questions asked. So if there was a bankruptcy, it asks what type and how long is discharge. But it's the same questions that you're familiar with on the 1003. And then it also asks the government monitoring to HMDA questions. And you can display all of them should you desire, or have them sort of pre-populated if you want. And then lastly, it allows the borrower to schedule an appointment with a loan officer. And it allows them to pick the day and the time that they wish the borrower or the loan officer to contact them. And then once I submit all that, and you can see how quick that took. I mean, it was less than 8 minutes, I think, but we've done thousands and thousands of these iterations, and you know, it's about an 8-minute average. So essentially, then it thanks them, of course, as the mortgage loan officer will be contacting them, and we have various different ways that we can disseminate this information to either loan officers or maybe a centralized desk based on what your preferences are. We also allow them to download a closing checklist that is specific to the information that they input in terms of what type of documentation that they were going to need, whether it's tax returns, W-2s, things along those lines. But the output is going to be a Fannie Mae 3.2 file, which pretty much any loan origination system or core banking platform out there has the ability to ingest. We've yet to run across one where we can't do it, and sometimes that might need a little bit of tweaking, but it's something we can accommodate on our end. We also can code to an API if one exists with your particular LOS right now, and transfer the data that way. But there's several different ways to do that. But the one thing that we did not collect, and you might be kind of wondering why, is Social Security number. I think I mentioned earlier in the process that customers putting their Social Security number in first and foremost when they set up an account or something oftentimes scares them away and prevents them from really moving forward and completing an application. But more importantly, in this circumstance, we don't ask it because once you have the Social Security number, the TRID clock starts ticking, and you have to provide disclosures within within an appropriate amount of time. But by not doing that, essentially what we provide is then the opportunity for your loan officer to reach out, review the data that they get, contact that potential borrower, and just maybe clarify some of the questions or maybe ask a couple more, whatever needs to happen there, collect the Social Security number, explain the rest of the process, and you're off to the races. So we kind of cut that demarcation line. As soon as that application is complete and in the hands of the LO, then it's in the hands of what to do best. It doesn't disrupt the rest of your process. It doesn't sort of force you to change your process or change you order various products and services and such. So it's meant to integrate and dovetail and work very closely with the systems you already have in place.
Michael, a couple of questions have come in. One of those questions is going back actually to the rate inquiry. And you had mentioned that that contact details or the details of the rate inquiry were sent to the loan officer. I guess the question is, what information is sent to that loan officer? Does that include contact information of the borrower?
Yes. So a couple of things go. Hang on a second. I'm going to pull up quickly here. I'll show an example of what that looks like. All this is configurable in terms of what you want to show to the borrower at email. But essentially, the loan officer is going to get the same information that the borrower is getting. And here's what it looks like. It's going to show the date and time, obviously very important in terms of when that rate program was pulled, and based on property, credit score, value, so on and so forth. Okay. And then it's going to have all the different ones that were displayed. It also allows them to, so if I had not gone in and clicked apply at that particular point in time, this email actually allows me to go in and apply from here. So it's kind of beckoning that customer to come back and finish the application or schedule an appointment if that's their preference. What was the other question, Sid?
The other question, actually, I think you started to answer it, was relating to email follow-up to the customer. What email communications?
Yes. So included in the software package is the ability for you to drip on that customer or member. So if they have not completed the application and they just went in and sort of completed that short form that got them the rates and programs, you can dictate how many times we send out a preset message that says, hey, thanks again for contacting our credit union or our bank. If this is the information we sent, if you would like to go in and complete an application, click here, and we can do that once a week, for a month, once every couple of weeks, maybe once every couple of days for the first week, however you'd like to schedule that. But we have preset follow-ups that are included in the package, and certainly, again, that customer to come back and complete.
And one additional question, actually two, but one is we know that we said the Social Security number isn't requested by default, but could it be included if the bank chooses?
Yes, there is a way we can do that, absolutely. You just have to consider the ramifications, obviously, if you wish to do that. But yes.
And then what does the lender get back after the application is completed?
So once the application is completed, there's a couple of different things that you can do. One of which is obviously the output of the data, which I mentioned before is the Fannie Mae 3.2 file. That is a data file that goes into either your loan origination system or your core banking platform, whichever you decide, or even a customer relationship management tool if you prefer. We have some customers that prefer to go into a CRM first before they actually put it over to the loan origination system. But the other output is essentially just a list of all that data that goes right to the loan originator. So you get the data file for use within the system, and you actually get the actual data to the loan originator. So the loan originator has that information. So when they reach out to the customer, they can have a productive conversation.
And if I can add to that as well, we've also integrated the Lenderful solution with LKCS's tool suite. So if you're used to receiving forms that are submitted through the website, and how you can route those form submissions with LKCS's tool suite, we can actually do the same thing with mortgage applications and rate requests and things like that. And also the next piece that Michael's going to demonstrate as well. So that's all actually integrated with the tool suite. So you can actually see all of the fields completed in that application within that tool suite as well.
Well, thanks, Sid. So also part of the digital platform, we have a function we call PreQual Express, and essentially it's a self-directed pre-qualification process by which a borrower can get a pre-qualification letter sent to their inbox in about 5 minutes or less, and it's available separately. You use it as a separate lead generation tool should you desire. So a component of the digital mortgage platform. Show this real quickly on pre-qualify here. And this is the outside here, just so everybody's maybe we're being slow kind of connection we've got. Obviously, since I've already input some of my information here, it's going to carry this information forward, personal information, where I am in the buying process, and this is just so the loan originator has some information on maybe how to prioritize this particular lead and how quickly we'll amount here for the heck of it. $250,000 purchase, down payment by percentage or amount, either way, it's single family, primary home. Case of pre-qualification, if a borrower doesn't know what the taxes and insurance are going to be, the system actually estimates it based on the zip code. I'll go ahead and put something here. As for current address, and it asks for current address because we are going to use a software to pull over in order to pre-qualify the borrower. We do not use Social Security number. We pull that soft credit pull based on date of birth, name, address. So now, my address here, which is not unusual, the post office, so we'll check for address normalization, of course. So it's going to correct that for me. It's going to ask if I'm torn out 32, remember. I should point out that the pre-qualification tool, PreQual Express, does not turn anybody down. In this case, it refers them to a loan officer. Obviously, we want it to go through the happy path and pre-qualified, but if it does not happen that way, it just refers the loan officer. And there's various follow-up in the process where it might do that, and this is one of them. VA loans can certainly be complicated for some, but if I am a veteran and yes, I plan to get a VA loan, this would say, well, you need to talk to the different officer is, and I'll talk a little bit more about that. In this case, I'm going to say no, so it'll continue through the process. At this point, it introduces the loan officer and asks for the authorization to do a soft credit pull for the pre-qualification. It reminds them that it does not impact their credit score because it's a soft credit pull, but it will be used to verify for and for abilities. And I'm just going to pull a sample here since this is a test site. Ask a few more questions about history, some things that may fall out or may require a referral back to the loan officer. Next. So at this point, it's going out, it's pulling it, and it's segregating those liabilities into real estate, non-real estate liabilities. So in this case, shows some tips about maintaining that score, making sure they don't negatively impact in the time, maybe applying for a loan or looking for a home. And also, if I had it, would have had a real estate loan. So let's say I had an existing home with a mortgage on it, it would have shown the mortgage to sell that or keep it, or system that payment in the calculations. My income source, obviously I've already input this information. It's also going to ask that income for the last 2 years. Obviously that's important. And then it's going through all the debt income, front end, back end calculations, and determining whether or not I can be pre-qualified up to the amount that I asked for. It never qualifies for an amount greater than that, but it may qualify for less than that. Those ratios are configurable based on how you would like them to be set. It qualifies either an FHA fixed or a jumbo 30-year fixed, based on obviously the amount we're asking for and the debt to income ratios that that occur. So this qualified up to $250,000, and you're almost ready to go here. Just check the right amount and down payment, and then get your pre-qualification letter. So when I click on sending to me, here's my email. I think I just got it, and then it's also sending that information to the loan officer. A little summary of that pre-qualification. And here's what showed up in my inbox. Obviously, I used a test, not Michael. But what it all does is it attaches the letter, and of course, all the terminology in the letter is configurable for your requirements. But this is one that's passed through with yours already. And it also go in and edit that letter. So even though I got approved for $250, if I wanted to make an offer, I certainly don't want to have a letter that says I'm approved up to $250. It's not, doesn't help with the negotiation, right? So it's allowed to edit within the amounts that I've been approved for. So So if you think about it, when your loan originators differentiate themselves in the marketplace and build relationships with referral sources, Mr. and Mrs. Realtor, if you can't get a hold of me and you have want to make an offer, you want a pre-qualification letter to go alongside that offer to purchase, you can always go to this site and you can have them serve themselves to a pre-qualification letter in about 5 minutes or less. It's a great little generation tool. Let me show you real quick what it looks like in actual application. So I said before, you can actually act on its own or as a part of the full digital mortgage application. So in this case, each loan originator can have their own landing page. Actually, a client of ours, as I should say, Waluku Federal Credit Union, and an officer is Gene Rivera. And basically, it allows them to click on pre-qualify, or if they want to jump in and apply, This and just there. That's how it looks like in there. So with that, here real quickly. I'm just going to show you.
So, Michael, we have one question.
Yeah.
When the borrower edits their letter, how do you keep them from editing the terms for their benefit?
Those are uneditable. The only thing is editable is the amount. So the amount of the purchase, and then basically we plus payment percentage, and so everything else sort of flows. Does that make sense? I hope.
Yeah. Thank you. So they can only edit the purchase amount.
Correct.
Up to the amount that they've been pre-qualified for.
That's correct.
So they cannot choose a higher amount without having to go through the pre-qualification process again.
That's correct. They could go back in and increase their pre-qualified for and follow through the process again, yes.
Okay, but they can't choose a higher amount without going through the pre-qualification process again.
Correct.
Cool.
Yep.
Thank you.
But anything less than what they've been pre-qualified for, they can stay. So,
yep.
Just a couple, I just want to show you some other sites that we've built. This is flagstarmortgage.com. Just a little different layout, but it's the same type of idea. When a customer's coming, they want to get purchase rates, get refinance rates, maybe get pre-qualified. But just a little bit different look and feel than what I showed before. Another, let's see here. This is my Lucas again. If I did that right. And I'm just doing this so you can kind of get an idea of how the branding, the look and the feel, so it seamlessly fits within the website. And if you are an existing with their clients, make it feel like it's a part of their existing site. All right. So show Michael real quickly, or we ask her some other questions, and then finish up on our offer.
I think you can go through the home equity quickly. At least I'm having some audio difficulties. I don't know if everybody else is.
You know. Looks like the system's recognizing that I'm talking here, so. All right, I'm going to assume that you can hear me. I'm just going to real quickly show you our reverse software. Very similar, but obviously geared specifically toward loans. This is actually a last one of our customers, Michigan Credit Union. If you go into their site at lcu.org, you select on the personal section and go down to home equity loans. The thing behind that is our software. There we go. So obviously a little bit different than a mortgage loan, but it is going to provide access to the activity information that are most commonly asked when someone's shopping for a home equity loan. Does it give them the ability to go in and apply right away, or maybe schedule an appointment with a loan officer? Gives them very basic program offered, again, durable. But it also allows them to customize a rate scenario specific to the mortgage side, but again, very specific to home equity. Home value is, what my existing mortgage balance is, property it is, single family or condo, primary secondary home code. And then it does some LTV calculations, again, which are all configurable. The maximum loan amount either for a home equity loan, a fixed home equity loan, or a home equity line of credit would be up to $70,000. I can modify that if I want to recalculate that. continue credit range, how much I'd like to borrow. Click next, and then it gets to my personal information, which again, asking for customer information until we're providing or about to provide some information that you know that they're looking for, pulling that through that sales funnel. So I submit that, goes out and matches up the programs with my particular solution, and provides what the payment terms would be: a 5, 10, or 15-year fixed, or a 25-year home equity line of credit. Allows me to change the loan amount if I apply that. Recalculate.
And the home equity programs and line of credit programs shown are obviously based on the bank or credit union's home equity programs on the screen, correct?
Yep, absolutely, absolutely. Completely configurable to whichever particular loan programs that you offer. Now, there's no third-party rate service for home equity like traditional mortgage loans, so we just set up a process by which you update us with your rates when they change, and not home equity. It's generally not all that often, but that way we know we're providing the current rates for customers. Remember at that particular time. You may have also noticed that I did get an email from Lake Michigan thanking me. So something similar that you would set up as well. And again, invite back to apply. So, and then if I do apply, an application is not the same as a mortgage application, but look and feel of it in the sense that that's the same type format, but it provides you basically with, oops, I went back. So, but it is the same type of idea. It wants a question that allows me to complete an application that is specific to equity credit. I will walk through the whole thing here. We're running a little short on time, but you get the idea. All right. Any questions on home equity? And the output on home equity, I should say, from a data standpoint, can be that same Fannie Mae 3.2 that you not into your existing core platform or loan origination system, or we can provide some of the output format that conforms with your specifications. Okay. Good. I hope.
Looks good. I have not gotten any other questions.
Let me go back into our deck real quickly. So in the spirit of, helping everybody through these challenging times here, LKCS has a list of offering that we wanted to make sure everybody was aware of before we wrapped up here. For a limited time, basically right now we're offering it to anybody who asks for it through the month of April. We're offering free individual landing pages for each of your loan officers that would allow them to have a digital online, modern online application experience available to them in very, very short order for free for 3 months. So basically what it does is provides the ability to apply for a mortgage digitally. So again, improving sort of the efficiency of that application experience for your LOs right out of the box. So if you're struggling to keep up with those phoned-in applications, or you have a real antiquated online solution that's maybe just form-based, real dated, not very user-friendly, then this is for you, and it's a great way to kind of get comfortable with our software, see the impact it can have with your members and customers. But we're offering it up for free for 3 months, and essentially what it would look like is this. Another kind of using Waluku here as our sample, but it would provide each of your loan officers with a customized configured page with your logo, your colors, your picture and contact information and such, with, instead of the pre-qualification piece, just the ability to apply. So, whoops, gives them very, very modern, efficient improvement over maybe the existing application experience that you have today at zero cost for 3 months. So Sid, I think my time is up. I'm going to turn it back over to you. If there's any last questions, I'm going to take us home.
No, awesome, thank you, and that's a very generous offer. So I'm sure we'll follow up with everyone that attended, and extend that after the webinar as well. So, Michael, I want to thank you very much for your time and effort presenting today. I think you definitely shared some information for everybody to think about, and again, I'm impressed with the platform that you have. So we look forward to talking with you soon. Everybody else, please feel free to send any additional questions or contact me offline. And we will be. We look forward to meeting with you in person when this latest situation ends. Otherwise, we can certainly meet virtually until then. So, thanks very much for your time today.